Hi everyone, thanks for watching. Originally this presentation was supposed to be live at the Vancouver Financial Planning Summit. However, due to the coronavirus, all conferences are being rescheduled. I didn't want to miss the opportunity to speak on a topic that I'm so passionate about. And I'm going to be talking today about life insurance and specifically advisor practices. And my focus of my presentation is around InsurTech, but I really want you to think about, are you an advisor or are you a tech company? Now, first off, a little bit about myself. I'm Charlie Conron. I'm the Chief Technology Officer and founder of a company called Life Design Analysis. Now, we're a software for wealth management firms, insurance carriers, advisors, but really at the core of our mission, we try and take insurance and simplify it for the end consumer. And that's actually how I entered the insurance industry. My stepfather was an insurance advisor, and he brought me into the business and asked, what could technology do for the life insurance space? And that really changed the dynamic of my career path, because I actually saw a lot of opportunity in how insurance solutions are delivered to the end consumer and how they're presented. So today I want to talk about a little bit about this disruption that we hear about in the insurance industry. Now, the status quo is certainly changing for advisors. We're almost being force-fed this discussion of disruption. You hear it every day in the media. Almost every industry is spoken about. But in my presentation, I really want to talk about transformation versus disruption, because there is a big difference. And as I say, a lot of noise is made around this disruption, but I'm sure a lot of you feel that you're sort of helpless in this sort of conversation. Now, this graphic that I have on screen is often touted around the topic of disruption, and there's no question that all of the companies on this slide are very disruptive. But I want to take you through a few of these examples and really take a look and examine of all these disruptive companies. And again, this graphic was made several years ago. How do their businesses look today? And so why were they disruptive forces? So the first one, I'll take you through a couple of these. It says, Apple didn't kill off the music industry. They did it to themselves by forcing people to buy full albums. Okay. Netflix didn't kill off Blockbuster. They did it to themselves with ridiculous late fees. That's true. We all hate late fees. Uber didn't kill off the taxi industry. They did it to themselves by limiting the number of taxis and the price controls. And my last one, maybe my favorite one, is Amazon didn't kill off other retailers. They did it to themselves with bad customer service. Now, if we examine all of these same companies a few years down the road from when this graphic was made, there's no question that we say that these are disruptive companies. But if you look at sort of the tagline of why they were disruptive and think about their business model today, I really want you to sort of examine that and think about, is that really true? Is it true disruption, or is it simply an evolution? And even of the disruptive companies, do they have to evolve? So the first example says, Apple didn't kill off the music industry. They did it to themselves by forcing people to buy full albums. Now that may have been true. Back in the day, you wanted one song, but you had to buy the whole CD. However, today, we don't even buy singular songs. We buy streaming services that give us access to all songs. So even their business model that may have disrupted the music industry had to evolve to stay relevant. Netflix didn't kill off Blockbuster. They did it to themselves with ridiculous late fees. Well, if you think about Netflix, initially they would have disrupted Blockbuster with mailing DVDs to clients. You mail them back on your own terms, no ridiculous late fees. But if you think about Netflix business model today, they're more of a content producer than they are even a streaming service. You see, they evolved from mailing DVDs to a streaming service, and now streaming services are table stakes. If you think about, you have your Disney Plus, you have your Prime, you have your Netflix, you have Hulu. There are unlimited options of streaming services. However, what makes Netflix unique is actually the original content they produce. Reed Hastings, the CEO, once said, I want to become HBO before HBO becomes us. So even Netflix, a disruptive company, had to evolve their business cycle to stay relevant. Uber didn't kill off taxis. They did it to themselves by limiting the number of taxis and price controls. Well, for me, I don't find Uber any cheaper than taking a traditional taxi. It's the experience of simply jumping out after you're done, knowing what kind of driver is coming right to you. It's the ease of transaction. And as I say, my last one, my favorite one, Amazon didn't kill off retailers. They did it to themselves with bad customer service. Well, I don't know if anyone shops on Amazon, but the number of times I've even talked to a customer service representative from them is nil. Amazon didn't kill off retailers because they had bad customer service. Amazon has literally no customer service. They have no need for it. What they did was create a marketplace where consumers could compare product and make an informed decision. But even Amazon is not immune to evolving its business model. They created a business line out of selling servers and cloud farms based off the unique challenges they had as a business. So, at the end of all of this, sort of disruption, there is one key focus, and that remains on convenience. Now, if we think about disruptive companies, generally we think about a boom in the market. So, if we've seen a disruption in the insurance industry, the robos coming for your business, term insurance becoming a commodity that's simply sold online, leaving advisors to focus on high net worth markets. We would expect a boom in insurance sales if a disruptive force was coming into the insurance industry. However, Lima reports that insurance ownership is actually at an all-time low. Premiums remain to grow, however, it's simply due to things like inflation. Actually, less and less people own policies, they just own policies of higher face values. So you think about, some of these examples of these disruptive companies, and they even had to evolve their business model. That's something we're not seeing in the insurance industry. We hear about the disruption, we hear about these robos, we hear about all of this technology in the insurance space. However, it's not driving new sales. So I love this graphic, and I really want you to question, do you think the life insurance industry is being disrupted? Do you really think you've seen 1,000 times magnitude shift in the way that insurance is sold today and how we're reaching consumers? Not only the technology in our space, but how we apply it to the customer experience. Of the advisors today, I really want you to think about how you've invested into technology in your practice. Because I think there's a need for technology, obviously, but it also has to be paired with the focus on how we actually deliver that client experience to the customer. And that's why I love the graphic so much. And it's a great cartoon that says, well, the new self-help strategy saved money, it lacked a personal touch. So it's a great example. A guy comes to the customer service desk, and the solution is to say simply Google it. Well, no question, Google is an extremely powerful piece of technology, but it doesn't mean just simply implementing it means we replace customer service. So technology on its own is not the real disruptor. Losing focus on the customer experience is the biggest risk to any business. So if you think about our previous cartoon, sure, there's a great disruptive force of Google, but it's certainly not going to replace our customer service agent. There is a time and a place, and we really have to think about how we cater that customer experience. We also think about how we have to pair technology like Google, for example, with the client experience or with our knowledge of techniques. And I'm going to talk a lot about these knowledge of techniques today because a lot of times we think about this technology in the sense of lines of code or gadgets, smartphones, all of the hardware aspect of it, but we don't always think about the process aspect of our knowledge of techniques and how we can apply that with technology to really scale our business and give a greater customer experience. Let's go through a couple classic examples because there is a really big difference between disruption and evolution or reinvention of an industry. One of the most obvious examples that I can make would be a horse and buggy versus a car. Not only did the buggy industry get destroyed by the invention of the car, but everyone down to the whip maker. There wasn't really a need for a whip in your Model T. So this is something that fundamentally changed transportation. Now, we see companies like Tesla, a lot of people would say is a very disruptive company, not only changing the way consumers purchase automobiles, they have no dealerships, you buy the cars online, but they're also powering these cars with a unique power source being renewable energy. So they're all electric cars, they're self-driving. Now, this is certainly novel technology and it's very impressive, but when you think about it, does it entirely reshape the automotive industry or is it simply just an evolution of it? Now, interestingly enough, if you ask Elon Musk, he'd tell you that the factory, the Gigafactory that builds the Tesla and Henry Ford's automation line were the real technology. And I think that's an important distinction to make because not only is the physical product, the car itself, actually technology and an invention, but how to assemble it and package it that it can get out to the masses, the assembly line, having that foresight, that's also a disruptive force because of the knowledge of techniques. What about other examples? A lot of people would say, and I remember when GPSs were coming out, a lot of people said they're disrupting the entire map industry. And if I was presenting to you live today, I would say, how many people used a map to get here today? And mostly no hands go up. But if we think about TomTom disrupting the map industry when GPSs came out, what about today? How many people would think about going out and purchasing a TomTom, rather than using your smartphone? Most people, would never purchase a TomTom because every single person has GPS right on their phone. Now, I don't know if I would say that the GPS has been disrupted, but it's simply evolved into a new form factor, more accessible for everyone. Now, what else could I tell you up on stage here today that you wouldn't have believed? So, I mean, if I told you 5 years ago that department stores are going to be replaced with beehives that are going to mail drones out to packages for you, would you have believed me, or would you have thought that that's a crazy idea? Fast forward 5 years, the image on the right here of the beehive drone is actually a patent from Amazon of how they picture delivering goods and sort of what a distribution center would be. So trucks come in the bottom, they deliver packages, drones distribute them to customers, and you can even see they've mocked in a sort of a retail store where people would go in and have contactless purchases. But technology has a funny way of we sort of historically overestimate its impact. So if you think about the Jetsons, they would have led you to believe we would be going for dinner, hitting a button on a machine, and it pumps out. On the other side of things, we historically overestimate it, but at the same time, we're in a day and age where we have self-driving cars. We have policies that are underwriting themselves. So it has this sort of funny way of overestimating it, but these technological advances just sort of creep up in there and change the way we do business. And generally I would say, how many people want to be in business in 5 years? And I would say, if you were planning on going to a financial planning summit, you're investing in your business and you want to be relevant in 5 years. But I want you to think about, if that's true, how are you investing in your tech stack for the modern way a consumer wants to do business today? So if you think about, sort of historically, how you apply your knowledge of techniques with your experience, all of your intuition, all of the things that make you unique as an advisor, but package them with technology to reach consumers today. Cold calling, once a staple of the insurance industry, one of the primary ways to acquire new customers and sell product, might today get you more received like the lady on the left. Instead, today we need to be more like Jim Carrey here on the right, where we're creating social content, we're creating thought leadership, and we're reaching customers in a new way. We have a saying at LDA that calls close deals, so the phone's certainly not disrupted, but just simply the way that we use it has certainly evolved. We can't just cold call prospects anymore. We need to nurture them and create value before we ask for the sale. So why technology? Well, tech has made finding our prospects and researching their needs more accessible than ever. In fact, 77% of people say they won't engage with salespeople who don't have knowledge of their business. 62% of them will look for an informative LinkedIn profile when deciding whether to work with you. 85% of people consider it important for you to have existing connections at their company, and 69% of millennial buyers are more likely to engage with a sales professional who has a social media profile, with information on it. So you have a presence there. If you think about like the classic LinkedIn profile, if you think about yours and it's just a resume of your accomplishments or your achievements, that's not what people are looking for anymore. People want to go on LinkedIn and find out what you represent, your niche, your ideas on different subjects. They want content and thought leadership. They want to be nurtured before they even make a decision on dealing with you. Even things down to the quality of your website, how professional it looks, will give them an image of yourself that that they will consider as important as the actual ideas and your experience. So if your website doesn't match your experience, it doesn't much matter if new consumers are looking at you and looking to purchase your services, because again, their image of you is what you're presenting online. It's not as today it may not be fair, but it's not as much about exactly what you also need to prove and show that image so that when they're researching you, they can find that information. So really, my goal in my presentation was to have you leave today and think about, are you a tech company or are you an insurance company? And I want you to evaluate. Some people you might say, well, I'm definitely an advisor, but there is some percentage of your business that has to be digital, whether it's going into your back office, perhaps it's e-apps, things like that. Some of you might say, I'm 5% tech company and 95% insurance advisor. But I really want you to think about shifting that percentage. Like for example, what if I asked you, what kind of company is Pizza Hut? Now, many of you would probably say, well, that's pretty easy. They're obviously a pizza company, or you might say they're a food company. However, what if I told you that 46%, nearly half of all of Pizza Hut's delivery and carryout orders come through digital channels? Think about that for a second. Half of all of their orders, online sales. That's $1.2 billion in sales for them every single year through digital channels. Would you reconsider your answer? Or at least would you reconsider prioritizing that at your company? So when asked, Baron Connors, who's the Chief Digital Officer of Pizza Hut, said, "I think what we're going through is the Uberization of our customer experience." He said, "A lot of people think Uber really transformed the transportation industry, but I think they've really transformed commerce." Now, that's a really important idea, not just their industry, commerce in general. So if you're honest with yourself and your percentage of tech company was low, but you still want to be in business in the next 5 years, I want you to think about how you're going to prioritize this distribution channel and how you'll make digital a bigger part of your life or your business. So, how are you going to marry your knowledge of techniques, your experience, your expertise with technology to deliver the best customer experience possible? Because just like Pizza Hut, 85% of people said they would use the internet in some way to purchase a life insurance policy. So think about that for a second. The majority of people, and this is a Lemur stat that was taken a few years ago, so this percentage is likely more like 90 to 95% of people will go online and use the internet in some way before making a purchase. Now, whether that's product research, information on strategies, what's recommended, maybe that's looking at your professional LinkedIn profile or your website, they are going to use the internet in some way to determine if they want to work with you and buy insurance in the first place. But remember, this insurance experience that they may find online simply is not available, and perhaps you're not delivering it as an individual. Because remember, this Uberization that we talk about, or that Baron talked about regarding his pizza business, has a profound impact on other industries. It fundamentally changes the client's experience of what a transaction can be. And, I agree, we're talking about life insurance, not pizza, and it's a lot more complex. But if you really think about it, if a menial purchase like pizza can be tracked all the way from the oven to every stage of delivery to your door, how come something that's a much larger investment, a lot more important like life insurance, hasn't had a similar level of investment into the client experience or the way that we actually deliver our product? I mean, if we think about all of the disruptive companies that we visited earlier, our Apples, our Ubers, our Netflix, our Amazons, they all offered a better client experience for the customer by letting them transact on their own terms, giving them full transparency over product choice, and make it easy to actually make the purchase. So technology is so hot right now. It's transforming the sales profession. It's changing the way that leads are generated to the conversations that happen once the digital handshake has been made. To a larger extent, it's accelerating connections, shortening sales cycles, and even bringing a new level of transparency, unlike anything buyers and sellers have ever experienced. But really, how we deal with it as an industry and how we react to it is really a whole nother story. So Napoleon Hill, in his book Outwitting the Devil, warned us into what he calls a hypnotic rhythm, which means doing something over and over until it becomes habit. So much so that it's part of a person's identity and they almost do it unconsciously, and therefore can't be broken because they don't even recognize it. Now, to me, this sounds so familiar to the insurance industry. We all want to make more sales. We all want to help more people. We all want to solve more problems. But how many are willing to invest in their business and put in the effort into their sales process to actually change it? And so the cartoon is great. I'm going to flip back and forth here, but essentially it has a guy asking, who wants change? And all of us want change. All the advisors out there want change. We want to be part of this digital revolution. The next slide says, who wants to change? And all of the hands go down. So a lot of us want change, but we're not necessarily willing to invest in our practice. Now, if Uber influenced commerce, you could certainly argue that Amazon led that charge. A lesson to retailers everywhere that if we fail to engage and give transparency and the ease of purchase to our consumers, we're at flat out risk of disruption. So if we think about the Sears of the world, Amazon essentially put them out of business. And again, it's not too far-fetched to imagine a future where when we search for a dangerous product like a blowtorch here, we might see some options for life insurance. We might even see Amazon offering its own product of life insurance to make it easier for consumers. After all, similar to their cloud hosting problem where they created a whole separate business, they have enough employees alone that they have to insure in group benefits that it makes sense to make a product. Jeff Bezos famously said, "Your margin is my opportunity." And I want you to think, if you were him, would you enjoy the margin in the insurance industry? Because according to a recent Lend EDU study, 38% of millennials already said they would trust Amazon as much as they trust a traditional bank to handle their finances. Now think about that. Nearly half of all younger consumers already trust Amazon to handle their finances. So when it comes to things like insurance, of course they're going to trust them to purchase them if we can't bridge that connection. But just as an FYI, we don't have to be disrupted. We can be part of this evolution. I believe the insurance industry is still at a sweet spot where we can embrace technology and marry it with our knowledge of techniques to make it our differentiator. This graphic is actually from LinkedIn, and it has some great stats on there about top salespeople versus the total. But I want to draw your attention to the last point, which is simply no technology used. And you can see the differentiator of top salespeople who use no technology is right around 2% versus the total where maybe 10% of people use no technology at all. So again, 98% of people report using sales technology on the job of top salespeople. 90% of salespeople report that sales technology is either important or very important to closing deals. And inside sales professionals are the most tech savvy, with 46% of them using policy management tools and promotional tools. If you're looking for productivity and sales tools, definitely check out lifedesignanalysis.com. We're made for insurance advisors to solve this problem. But technology needs to be a bigger part of the life insurance sales cycle if we're going to change the trend in declining sales and customer engagement. We need to make the leap and adopt new processes, and we need to get out of our hypnotic rhythm, out of our comfort zone. Because, it may not surprise you that the customer journey has evolved. All of the disruptive companies, again, there was a relentless pursuit to improving the customer experience, making it easy, adding transparency. And advisors and insurance companies can no longer ignore process improvements that align the customer insurance journey with other purchases in their world. So if you think about, if our pizza is that easy and that transparent to order, it fundamentally changes what our customer experience is going to be. Now, when I speak to a lot of advisors, they reference their unique value proposition. But I really need to think we need to remember that in a pinch, people don't just rely on friends and family. This is a Google slide when solving problems or self-diagnosing. People turn to Google search before they turn to friends and family. They expect content that's meaningful and quick to address their needs. Now, on the surface for advisors, I know this seems like a problem if your unique value proposition is your experience. However, this can be a huge positive for you. You can be there for your clients in new ways, providing information they perhaps didn't even know they were looking for, nurturing them with information that only you have, marrying your knowledge with technology to deliver it to the customer in new and exciting ways. And yes, there is risk. If we want to be part of this evolution rather than be flat out disrupted, we need to add convenience, communication, transparency to the customer experience. We need to get out of our comfort zone. We need to work to reinvent our process. But there is also reward. We have a unique opportunity to decide if we want to be Blockbuster or if we want to be Netflix, a victim of disruption or a catalyst for reinvention. Really, in the end of it, I want to leave you with this image that I think does a great job to illustrate this idea of knowledge of techniques being technology, just like our bits and bytes, our lines of code, our applications like life design analysis. I want to show you that this image here is a silverback gorilla, is a great example of technology in the broad sense. So the gorilla is using the stick to gauge water depth. It's a tool used for survival to this gorilla. Now, I know if you were walking in Stanley Park or walking outside in the park, if you saw a piece of, like a stick on the ground, you probably wouldn't think it was a sick piece of technology. Probably just look at it like a stick. But to this gorilla, the way it applies its knowledge of techniques to the stick becomes technology. Now, tech has changed the speed and scale that business is done. Tech is an enabler that can automate functions previously unthinkable. Self-driving cars is an example. But remember, technology on its own is not the real disruptor. Technology and attention to the customer experience is how we change the client experience and make a sustainable business model. Now, I remain very bullish on advisors. In fact, I've built my business around them, and I don't want to become the whip to your buggy. However, without investment into technology, we leave ourselves open to disruption. Now, at very least, we should apply technology in our business because even the gorillas are doing it. And you don't want to lose your next insurance sale to a gorilla.